Welcome back, Tasty Crypto Show. I'm Ryan Grace. He's Mad Mike, capital M-A-D. It's Wednesday, April 10th. How are you, sir?
I'm excited for the Bitcoin halving.
Let's just jump right into it then, Mike. We will talk about your newsletter and everything else we want everyone to sign up for at the end. But the halving is expected to occur here possibly as early as the 13th, so a few days. Yeah. We've got your guide to the halving today.
Yeah, we're going to do all things halving. We're going to go over what it is, why it happens, a brief history, and then we're going to get into some analytics, look at some past behavior, see if it might be indicative of future performance.
Okay.
And have some fun with speculating.
Let's do it. And really quickly, to set the stage, because I think when people hear halving, you look at the cycles in the past, and we're going to do the same thing here today. Generally, people think it's pretty bullish. Are you bullish?
I'm nothing. I'm bearish to neutral on the halving.
No opinion. You have no. Neutral,
I have no opinion.
Neutral here.
And
it's
I'm going to show you why.
You're neutral.
Crypto neutral. Okay. Does that even exist?
Apparently so.
I've never heard of somebody being neutral on crypto.
No, first time for everything. I'm bullish. Let's just jump right into it.
Let's do it.
The Bitcoin. This is kind of your ultimate guide to the halving. Kick us off, Mike. Why do halvings occur? What is the halving for anybody that's not familiar with this?
Well, for those three people that aren't aware of the halving, we're just going to blast through a quick slide here. There's three reasons why it happens. To control the supply. Over time, less Bitcoins are issued every 4 years. The amount of Bitcoins that are paid to a miner for the reward gets cut in half. And so that is going to happen in another week. And remember, the origin of all Bitcoin comes from miners. Miners solve the algorithm and they get the block reward, and they in turn tend to sell that reward on the open exchange for fiat currency, which ultimately trickles down to us, and that's how we get Bitcoin.
Yeah, this is the incentive mechanism for participating in the network.
Right. Otherwise, why would somebody use their time and hardware and compute to solve these algorithms?
Right. And this is by design. I think that's the main point here. This is part of the Bitcoin network. This is within the code base. I mean, this is, again, it's by design that every 4 years, or it occurs every 4 years, but it's actually every 200,000 blocks, which we'll jump into in just a second. But over this period of time, this is a way to control the supply. This is a way to add stability to the system. It makes it a little bit more predictable compared to, and I guess that's what is important here for context, compared to a lot of fiat currency monetary systems.
Right. You have to remember Bitcoin was created on the tail of the financial crisis, in response to the financial crisis, to have more control over an origin of money, which became Bitcoin.
All right, so controlled supply, economic incentive, and some security elements here that we've hit on. Let's take a look at the past, though, because this is not the first halving. I believe this is the fourth halving event since the inception of Bitcoin. Yeah,
the first halving, if we look at the chart, 2012. Ryan, have you ever heard of Bitcoin 2012? Were you involved?
I don't think I definitely wasn't in Bitcoin in 2012. I got into Bitcoin.
I know that because you wouldn't be here right now if you were.
Yeah.
You'd be on Fiji or something.
That's a good point. I got into Bitcoin in 2014.
Okay.
One of those things where you're learning a little bit about it. I don't remember exactly how I heard about it. It might have been on Real Vision, actually, Raul Paul. But that said, I got into it pretty early, but like a lot of people, I don't know, I took a conservative approach. I didn't put very much into it. Let's put it that way.
Yeah, I was 2 years after you, but I was the same way. I was like, just in case, right? Yeah. And it worked out, but it could have worked out a lot better.
Yeah, don't get me wrong. Made some money, for sure, but not nearly as much as people that aggressively, probably had a better understanding of what this was at the time. Just smarter than I.
So the reason I'm bearish, if we look at the yellow graph line here.
Wait, I thought you were neutral.
Well, I'm neutral to bearish. I don't want to say I'm bearish. I'm bearish in the short term. I'm just going to say it. But I'm very bullish in the long term. I know it's going to upset a lot of people being bearish on Bitcoin at any point in time. So if we look at this chart here, we can see at the bottom are the dates, 2012, 16, 20, 24 halving. In the last halving, that shaded yellow region is 116 years away. So there's a lot of time that has to elapse before that last Bitcoin is mined. And in the very last block, there's going to be 0 Bitcoin reward. It's going to just be the fees.
In terms of the mining reward.
Right, exactly. So 2012, I find it interesting. If you look at red, the notes in red, we can see the total amount of Bitcoins that have been mined up to that point. So 2012, 10.5, 2016, almost 16 million, 2020, 18.3, and coming up next week, 19.7 million Bitcoins will have been mined out of a total, if we look at the right, 21 million. So almost 94% of the Bitcoins in existence have already been mined. And so we're going to look at what that means for supply dynamics in a little bit. But this is just to give everybody an idea. And
where we've come from here.
Where we've come from and how few there are to go.
Yeah, and I think when you look at the total supply here too, you probably have to assume that some coins have been lost forever.
Oh, yeah.
Seed phrases have been forgotten. I think there's that famous story of the guy that the hard drive somewhere in a landfill or something.
Wales, right? So I'm trying to get that guy on our show, by the way.
Yeah. So there's that piece to it as well. But I think to your point, where we are here today, most Bitcoin, vast majority of it, has been mined. The full 21 million won't be reached until 2140, and that's 7 million more blocks, which you have equated to about, what, 116 years?
Yeah, approximately, give or take. It should be about 116 years, and that's a long time. We hear 2140, we look at it only as a number, but we're all going to be gone, unless there's some revolution in modern science or medicine. We're going to be long gone. Our grandkids, great-grandkids will be around when the last Bitcoin is mined.
Quite the assumption, Mike.
Well, the way I live, Ryan, I definitely won't be around. But, World War I hadn't happened. If we look back 116 years, where the world was at then, just to put this into perspective, Titanic was not yet built. So that is how much time we have to pass until the last Bitcoin is indeed mined. Yeah.
Well, I think I kind of get your point here, neutral to bullish. If I read between the lines, I think what you're saying is that at this stage, the impact on supply is obviously a lot less than it was around the first halving, right?
Yes.
The first halving, you see a very significant reduction, and I get a different price at the time, but very significant reduction if you go from 50 to 25 to 12 and a half to 6 and a quarter. I think it's going to be 3 1/8. So maybe less of an impact over time relative to everything else that might be driving Bitcoin prices.
Yeah, and if we could just jump over the next slide. So I did a little bit of math. I got some data. So supply is going to be reduced, but by how much, right? Yeah.
Well, that's the argument, right? Just so everybody fully understands where we're coming from. We are assuming that demand is stable or increases, and the rate of change of supply growth gets cut by 50%, which in percentage terms is a large amount. But I think to your point, when you look at what that actually means nominally in the number of Bitcoin that are being added to that total supply, it really doesn't matter or have that much of an impact relative to just this demand that exists here today. Like the demand today versus, let's say, another couple of weeks, and the change in the supply issuance really is minimal.
There's no change in the fundamentals. And this is, I think, an ideal situation. First of all, I don't believe the past repeats itself, especially in the markets. Second of all, this is, I think, since the fundamentals aren't changing, how is this not a buy the rumors, sell the news event?
Sure. We saw that with the ETFs, and I think markets being forward-looking, being efficient, right? Arguably, most people that are participating in Bitcoin are aware of the upcoming halving. And we've seen the price run up ahead of that pretty substantially, right? We're near all-time highs. Could be a sell the news sort of event.
Yeah, but just to put this into perspective here, if we take a look at the slide, we can see the reduction. Right now, 900 Bitcoins are mined every day. And most of those Bitcoins are sold on the market by miners. So that is going to go from 900 to 450.
Less Bitcoin for miners to sell, less selling pressure. Not quite sure that's bearish.
Well, let me continue my narrative here. So if we look underneath the 450, we'll see the 24-hour Bitcoin volume as indicated by big number on Dune Analytics, which is 346,000. So what percent of 450 versus that daily trading volume? 300. That's at $346,000. That's 346,000 Bitcoins. So to put that in perspective, the new Bitcoins coming into issuance are 0.13% of the daily volume of Bitcoins traded. How is that going to have a material impact on price to double it or triple it, as some people are saying?
Sure. I understand where you're coming from, but let's go to the charts. Let's
charts.
look at the past 2 cycles here, because regardless of what's driving this, this is what objectively has happened. So we've had 3 halving cycles up to this point. If we go back to the first halving, there's not a lot of data. Certainly there's not the participation in Bitcoin that we've seen today. If you look at some of the mining stocks even that exist here today, no one was really participating in these in the same way that they are presently at that point. So I think in fairness and just generally speaking, we have to call out the fact that we don't have much data here. You have a sample size of 2 occurrences or 2 cycles. So this is all we have to go off of. But it is fun and it's interesting regardless when we look at this.
It's tough to look at the history of Bitcoin because it's gone up so it's such an astronomical rate. Before 2017, you just can't put it into perspective.
Yeah. Let's have some fun with it though. So looking at, starting with the second halving, July 9th, 2016, this is the cycle looking at, obviously not the 4-year period, but looking at where we peaked. So from July 9th to 2016 to the peak that we saw during that period of time, December 16th, 2017, price of Bitcoin goes up 2,891%. It then falls roughly 80%. But when you look at this cycle and how it played out, a hell of a rise in the price. And doesn't take much, I suppose, if you're starting at $600, $700 and you end up getting closer to 20,000. Whether you sold up there or not is probably a determining factor in whether you remained in crypto for what was a very bearish period.
Sure.
Shortly thereafter.
You all remember that.
Yeah, exactly. It wasn't pretty. But this, what I think is interesting about it, is not the only time that we've seen this similar behavior in markets or this pattern play out. So here's what we saw around the second halving. Let's fast forward 4 years and take a look at the third halving. So starting on May 11th, 2020, we top out up 688% on November 8th, 2021. When you look at Ethereum as well, Ethereum outperforms here. So Bitcoin jumped 688% from where it was on November 8th. ETH is up 2,310% at that point. So smaller market cap, you can make that argument probably this time around for some other tokens if it plays out that way. I think Solana is probably one people are focused on. If smaller cap stuff that has higher volatility, if it's all correlated, those are areas where we could possibly see outperformance. But again, you sell off shortly thereafter when you reach that peak. So up 688%, if you bought it there thinking it was going to continue to run and you held on to that, if you ultimately held it all the way down to the FTX collapse lows, you're down 76%. If you didn't do anything throughout this time and you can stomach the volatility, this cycle is interesting in that we actually have traded at a new all-time high and set a new peak during the 4-year period post that first peak that we sold off from.
Not adjusted for inflation.
Not adjusted for inflation, so we can bring it down by, 10 to 15%.
All right.
But up 753% if you just, and again, we're kind of cherry picking numbers. We're just starting with the halving date and we're looking at where that topped out. Clearly, nobody knows what's going to happen next, but I think it's a little bit of a framework. It's fun to look at these patterns. So we go from May 11th, 2020. If you hold it until today, you're up 753% on the price of Bitcoin if you're still holding it. So that's this cycle. We've done some analysis around it. We've seen that over the past 3 cycles, and we did a show maybe a couple of months ago. It was kind of early on when we first launched the tastycrypto show. But looking at price targets and talking about, okay, just based on this model, and it's a very simple model, what could we see happen? And what we've seen is that peak that we experience in the markets from the start of the halving to the eventual peak during the cycle, it has fallen over the last 3 halvings by about 70% each time. So we're kind of looking at this and saying, well, what would your return be if your 753% fell 70, 74-ish%, I think is the average, what would you then assume would be the ultimate peak?
Right.
And it gets you, depending on, again, where your Bitcoin spot starting price is, it gets you to, you know, a point where you're still returning over 100%, and you're closer to, let's say, 150,000 on your potential price target if you use our very, very simple framework. But it's fun to look at it this way. Whether this is due to the halving or not, given that we've just picked the date of the halving and have said, oh, because that's the date and here's what happened thereafter, it's got to be bullish. I think that's still up for debate, because when you look at global liquidity, for example, you look at central bank activity, you look at interest rate cycles, you look at some of the monetary policy that's been in place, asset purchases in the open market, all occurring around the same time.
Yeah.
Liquidity in kind of 4-year cyclical periods.
It is a coincidence.
Is it the halving? Is it the money printing? Is it the larger awareness and increased adoption of this? I mean, certainly there's more people that are investing and trading crypto today than there were 4 years ago, and certainly a lot more than there were 8 years ago.
40% of Americans own crypto in some capacity right now.
Okay, and when we look at that, you know, going back a couple of years, it was closer to 20%.
Yeah.
So, tough argument to say it's solely based on the halving.
Yeah.
The halving is upcoming and everybody's bullish, Mike. So there.
In a year from now, we'll have another show because we're going to have some real data there to see what actually happens. Ryan, how long do we have to wait until after the halving actually occurs where we can revisit this and say, here's what happened, here's the reaction? Is it weeks, months, is it a year?
Yeah, it's a good question. I mean, when you look at these last couple of cycles, first halving, going back to 2012 is a little bit different in terms of the duration from when you peak. But if you look at these last two, it's roughly year and a half-ish, 500 days or so. That could be your framework, you know. I think that's what's tough about this is it's really easy to look back. Hindsight's 20/20. You just buy it at the halving and you hold it until it peaks, right? Well, when does it peak? What can we expect in terms of percentage return? What's the magnitude of that peak? Maybe this is helpful. I personally am bullish. I think that you're going to see a 6-figure Bitcoin price this cycle, this halving cycle. Is it in the next 500 days? Who knows? This time around, though, you have the ETFs hooked up. I don't think much has changed. Sure, interest rates are higher. But in terms of money entering the financial system and liquidity, that's still ongoing in a variety of ways. And so I think that you could get there, given the adoption and given, again, the fact that that flow can get into this market much more easily. I think you see a 6-figure Bitcoin price.
Wow.
Could you sell off prior to that? Absolutely. You know, I mean, we've seen how volatile this can be. We're trading at the highs in terms of the 1-year volatility. It's closer to 80%. Could you be at 65? Could you be back down to 50? I think so, but I would look to buy those dips in this cycle. I think structurally, you know, we are in a bull market.
Yeah, I mean, that's for sure. I mean, I'm bullish too on Bitcoin. I think within a year from now to say it's over 100,000 is very reasonable. I just don't think this is going to be the long-term catalyst.
The halving itself.
Yeah.
Yeah.
I mean, Bitcoin is boring. There's no earnings.
What?
There's no share advocacy. There's no revenue. There's only the halving. So when something happens, we're hyper-focused on it when we don't really even look too much at the material impact that it has on the underlying blockchain, which at this point, now, you know, 8 years ago would have had a huge impact.
Sure.
4 years ago, a big impact. Today, I don't know.
Well, I think that's fair. I mean, going forward, let's fast forward your 116 years or so. At some point, the halving no longer occurs. Doesn't matter, right?
Our great-grandkids going to be on air talking about the halving 115 years from now.
I'm getting one of those chips implanted, and we'll have bionic parts. I'll be on the show.
We'll be here forever.
Of course, man.
We'll just get an AI version of you.
No, I'm just trying to get to that 6-figure price. And
we're all trying to get there, man.
We'll go from there. Mike, who cares what we think? Let's take a look at what the options market is saying in terms of how views are expressed through those call options. You know, obviously at times we see put open interest increase, but with an asset like Bitcoin,
For those that don't know,
it's pretty, mostly it skews towards bullish positioning that way. You can short Bitcoin, sure, and there have been times where you've been able to make a lot of money if you could time it, but generally speaking, this is a tough short. Yeah.
The green represents call options, which are bullish bets on the market, and the purple are puts, which are bearish bets on the market. Ryan and I have worked in options our whole lives, but they're
tasty live, Mike.
Hey, this is going to go on YouTube, man. Not everybody knows about option contracts.
Fair enough.
But then again, I think everybody does know about option contracts after 2021.
Fair enough. So what are we seeing here?
So we're looking at the open interest for the June expiration cycle, which is the latest one that they have listed on Deribit after the halving, which will take place in April. And as we can see, there's a lot of open interest. A lot of long call options going all the way up to, well, it stops at 160,000. I see there's some long 160s in there, which mean it'd have to double in price.
Well, it gives you a sense of where these, if we just look at these and think of them as bullish bets, where are those bullish bets concentrated? Whether these are the right bets or not, yet to be seen.
I mean, if we look at these, I would say that they support my argument of a neutral outcome almost, because although there are a lot of calls, I mean, I'm seeing if we add up all the little bar lines of puts and calls selling off, it's kind of predicting, I don't know, I think it's going to fall right in the middle.
Okay. Well, we will see. Certainly there is that concentration from, let's say, 70 to 100,000 or so. Once you get beyond that, not a lot of, people expecting a huge rise post-halving into that June expiry north of 100,000, at least not today, given where call option open interest is. And again, anything can change here, but we'll keep an eye on that. There are some other ways, though, that you can express the view. And I want to talk about this because in traditional markets, in the listed space here, you have Bitcoin mining stocks. You've got Coinbase. You have, on some of these miners, and certainly on Coinbase, you have liquid options markets. So there's the ability to, at times, put that position on, that when you look at the correlations, largely, strong positive correlation for the most part, but much more volatile. So you, in a sense, if you're right, you can get a little bit more bang for your buck on the upside. That's the view, right? Miners are positively correlated to the price of Bitcoin. And because they have a smaller market cap, generally speaking, they're going to be much more volatile. That's what we've seen. That's the thesis. I don't know if it will play out. So we ran some numbers today, and I want to look at those last two cycles and get your thoughts on this because they're just drastically different. So we can't really go to the first halving. These companies don't exist. Riot Blockchain is a biotech company prior to the pivot, I suppose. So you don't have a lot to go off of. But if we look at the last two cycles, or the last two halvings, so this is going to be the second halving and the third halving, these two cycles, we've got Bitcoin up over 1,200% for the entirety of the cycle. Miners get destroyed. I think when you look at the price of Marathon or CleanSpark at that point, you're questioning, how soon till bankruptcy.
Yeah, I'm surprised. I'm looking at Marathon's been around since 2012. I didn't know it's that old. Yeah.
So some of these are, they've been in, you've been able to participate in them. Whether or not there's been a lot of active participation, I think you'll find that, not very much liquidity, not very much volume in there if you go way back. But these got destroyed. Bitcoin was up 1,200%. It was almost irrelevant that they were Bitcoin miners in terms of the price performance.
Was that their primary business model too at the time?
I do not know. I know Riot was a biotech company that maybe had a patent or something, and they had then shifted. There was a lot going on. I mean, there weren't that many people really participating in Bitcoin at this point, right? And we're going from, when you look at that 1,200% return, we're going from like $600 to $20,000 ultimately at the peak, and it probably crashes back down to somewhere around like 8 or 9, I think, if I recall correctly.
You could have bought Marathon for under $1.
Yeah.
For 50 cents in 2020, and you could have sold it for $75 in 2021.
And that's what, so let's look at the other side of this, and that's what makes this analysis difficult. It's tough to say. I think it probably makes more sense to go off of the most recent cycle. But yeah, now we have stocks that are trading under $1, and they go back up inevitably. And so you look at the performance of these miners, CleanSpark 660, Marathon's up over 2,000%, Riot's up over 500%, like Doesn't even matter at this point. Bitcoin's still up though, 700%. So I don't know if there's a real clear takeaway there. We don't have that much data to go off of. I wanted to objectively look at what have miners done in the last 2 halving cycles. Here's what they've done. I, again, would lean more towards the most recent cycle here. But there could be an opportunity. I think it's more a trading opportunity. If you're looking at this as an investment and your view is just simply for whatever reason, Bitcoin prices are going to go up, I think you own Bitcoin.
Yeah.
But if you have the opportunity to get into these where volatility for the underlying equities is relatively low, implied volatility, I don't know if we can pull it up real quick for any of these miners, but they've traded over the last year, realized vols have traded north of 150%. Let's say CleanSpark, I think, is like an 85 vol right now. They're all kind of around 80 or so. They can double. And so if you're able to buy call options, I think the trade here is you just buy call options with a good chunk of duration, and it's a way to participate in upside, right?
For this cheap, I mean, Riot's trading under 10, just buy the stock, right?
Yeah, there's that, there's that opportunity too, but I think that this is more of a trading vehicle, at least that's the way that I would treat this, versus, well, I'm bullish on Bitcoin over a longer period of time, I'm just going to own these miners. Not necessarily.
Yeah.
I mean, some of these miners, it doesn't mean the ones on screen here, but some of these miners might not make it. If the reward's cut in half, mining becomes more expensive in terms of being able to cover your costs through the sale of those rewards. The more efficient miners are going to come out on top, but not everybody's going to make it.
Yeah, and I think the miners were losers with the Bitcoin ETF because, I mean, miners, my dad, for example, has owned Riot. He's owned Riot for 4 years, which has been performing horribly over the last year. There's
what's he doing?
I don't know why he doesn't sell. He told me he has a hard time selling things after he buys them. But I think that these companies were getting a lot of liquidity just because people wanted access to Bitcoin, even obliquely.
Yeah.
And now they have the spot ETF out there. So why would you invest in a miner which may or may not attract, kind of like the Bitcoin Trust?
Right.
Why do that if you could just own it purely one-to-one?
Yeah, well, I think the reason you would do that again is the leverage, the trading, the vehicle there, the speculative nature. It's not any different, in my opinion, than a gold miner. Right, you're still going to have that underlying commodity risk. So you've got the Bitcoin vol risk, you've got Bitcoin risk, but now you also have operational risk. You've got this company-specific risk, right? You also have, to some extent, and not that you wouldn't have this with Bitcoin, but you have the equity market risk associated with these companies.
Well, you're able to diversify your crypto holdings with them.
But I think it's a great point. Like the Bitcoin proxies that have been used prior to the ETF maybe no longer will be used in that same way, or less of a reason to crowd into them. Not that there's been a lot of crowding into it given some of the performance over time. But real quick to wrap things up and just to kind of hammer on this point, these are the correlations between Bitcoin and those 3 mining stocks. We've got CleanSpark, Marathon, and Riot up here on the screen. So while there is a positive correlation, it's nowhere near the positive correlation that we see when we look at, let's say, Bitcoin and Ethereum or Bitcoin and Solana. When you look at the individual cryptocurrencies or the tokens themselves, much stronger positive correlation to the price of Bitcoin than the miners here. Again, yes, majority of the time they're moving in the same direction, but as we've seen, you can get periods of time where Bitcoin significantly outperforms or even underperforms versus what the miners are doing. So,
Ryan, real quick, I want to end this on one note. Bitcoin is trading spot at 70,000 exactly. 1 month from today, I bet you $50 it will be trading under $70,000. Do you take that bet?
1 month.
It's May 10th.
Oh, man, see, I think you're right on the buy the rumor, sell the news, and in the short term, like you might be able to, like, look at the ETFs. ETFs are clearly a very bullish catalyst for Bitcoin. Pushed us to new all-time highs.
I thought you were a bull, man. I thought you were the bull here.
It's all about the time frame, my friend.
6 weeks, I'll give you.
ETFs, 20% sell-off, only to move higher to new all-time highs. You are picking what I think might be a pretty decent spot to bet on some short-term downside. Can you give me a 3-month period?
Done.
Okay.
Shake the hands. That's the show.
70,000. That'll do it.
No, $50 bet. It's above or below 70,000. Or
Right.
you want to make it a $70,000 bet?
No, 70,000. One Bitcoin is the bet. 70,000. I think we'll be above that in 3 months. Mike thinks we'll be below. We shall see. Stay tuned. Victor Jones is up next with The Price of Truth. I'll be back on Monday with Frank. I'll be back with Mad Mike next Wednesday. Until then, I'm Ryan Grace.
I'm Mad Mike.
Thanks for watching.